All right, good afternoon, everyone, and want to thank you for coming and spending some time with us again here today. As you can see, we're going to be talking about the subject today, wash sales in the active trader. Before we get started with the main part of our presentation, we just got a couple housekeeping things to go over here real quickly. Before we get started here, our legal friends just ask us to make sure and remind you again that the webinars that we present here at TradeLog are not financial, tax, or legal advice. So again, all the information that we present here is appropriate for all people. We just want to make sure you know that we're not responsible for your personal investing or reporting decisions. Now, if you've never attended one of our webinars before, you'll notice on the right-hand side of your screen you do have some controls there. If you can't hear the audio right now, or it's cutting in and out or fuzzy at all, there's also a phone conference system that you can call into there. You'll notice there is an 800 number and a PIN. You can call in that via your cell phone or home phone and listen to the webinar that way, and you can hopefully clear up any problems that you're having. You'll notice that you also do have some controls there. If you have any questions during the course of the presentation, you'll notice if you've been to one of our webinars before, there's a specific questions box. I'm going to be sitting here in the background going through some of those questions while Jason goes through the presentation today. So submit those. I'll do the best I can to answer them, and we'll recover anything we need to at the end of the presentation. But again, make sure you use specifically that questions box and not the chat box. And we'll cover those type of things at the end of the presentation. All right, so without further ado, I'd like to introduce Jason. He's going to be your presenter today, Jason Derbyshire, and he'll be going through this subject for you.
Okay, great. Thanks, Caleb. I'm glad everyone could join us this afternoon. Before we get started, of course, our theme again is wash sales and the active trader, as Caleb mentioned. I want to ask a few quick questions of the audience, take a few polls. First of all, I want to find out how many are current TradeLog users. That helps me especially as we discuss some of the features of TradeLog when it comes to wash sale reporting. So just want to find out a little bit about the audience we have here today with us. Just give everyone a moment here to answer that question. All right. Excellent. So most of you are familiar with TradeLog. That's great. I hope to really show you some of the features in TradeLog that are particularly helpful when it comes to wash sales. But now also I want to ask a few questions, or one question mainly. Real quick, as you see this poll that I'm going to put up on the screen, which of these questions do you think you could answer right now if you needed to answer them? This helps me kind of gauge a little bit how much everyone knows about wash sales. We're going to be talking about these subjects today. Any of these questions you think that you're able to answer, just click on it and submit your results, and then we'll see what kind of feedback we get there. In the meantime, too, we have a few more people joining us, so if you're just now joining us, we welcome you again. One thing I'm going to mention, we are, as Caleb mentioned, going to have some Q&A time at the end of our presentation, so feel free to submit any questions you have through the questions box. We are focusing on wash sales today, so those are the questions we're particularly going to be interested in answering. If you have a question simply about using TradeLog or you need support, we encourage you to contact our support department at any time that they can assist you. That might be a better venue, but especially if you have a question about wash sales or about something we're discussing today, please do shoot that over to us, and we'll see what we can do to answer that either during the session or at the end. So I'm going to close that poll there and see that most of you know a little bit about what a wash sale is, but some of those other questions might be a little more difficult, such as when wash sales cause a problem, how IRA is affected, or how you can avoid wash sales. Just to get started here, the IRS wash sale rule can certainly have a significant impact on a trader's returns. If you've been trading and you've been filing your taxes, you know that wash sales are a very important part of a Schedule D. For most traders, generating wash sales is inevitable. It's just going to happen unless you make only a couple of trades a year. Maybe you're more of an investor. Then you may be able to avoid wash sales completely, but for the rest of you, it's pretty much inevitable. So calculating and adjusting wash sales, that can be a very daunting and overwhelming task sometimes. We're going to get a little bit of appreciation for that today as we talk about wash sales. We're going to first talk about what the IRS wash sale rule is. We're going to talk about how to calculate wash sales. Then we're going to look at the effects that wash sale can have, particularly on a trader, and then how to possibly avoid those effects of wash sales and when that is important. We'll also talk a little bit about tax software, common tax software and wash sales, as well as TradeLog software and how it handles wash sales. And throughout this, I'm going to be switching over to a copy of TradeLog software. We're going to do some little demos just to show how you can use some of the reports in TradeLog in conjunction with some of these things that we're discussing. Let's get started with the basics. What is the IRS wash sale rule? Well, it's on publication 550, page 58, is where we can find the instructions about the wash sale rule. And we're going to kind of break that down a little bit in plain English for us today. So first of all, a wash sale happens when you close a trade at a loss, and then you buy back either the same security or substantially the same security or a contract or option for that security within 30 days before or after that loss occurred. If that happens, you cannot take the loss at the time when it actually occurred. The loss would now move forward or backward and is attached to the cost basis of the trade that triggered the wash sale. Now, if that trade, the trigger trade, ends in a loss and you buy the same equity again within the 30-day window, then the loss moves forward or backwards again. So it could be a repeating cycle throughout the year. Very active traders who file on a Schedule D will see sometimes hundreds and thousands of wash sale adjustments that occur throughout the year. Now, a few things in particular that we want to note about the IRS instructions for wash sales. Wash sales include substantially identical stocks or securities and contracts or options on the same underlying stock. Therefore, wash sales have to be adjusted between stocks and options for the same security or the same underlying ticker. This is very important. Some people think that options are handled different. Maybe they only have to adjust wash sales between options themselves, but that is not true. The IRS has made very clear through revenue rulings in the past, as well as their instructions on publication 550, that when you have an option or contract on underlying security, the same security as you have stocks, then wash sales can occur between those stocks and those options. This is very important. Many people do not adjust properly for wash sales because of that fact. Wash sales must be also adjusted across all accounts. So if you have multiple brokerage accounts or even multiple accounts with the same brokerage firm, wash sales have to be adjusted across those accounts. So you might sell a security in your Fidelity brokerage account, and then you buy the same security within a 30-day window in an E-Trade account, for example. Well, there might be a wash sale that goes between those accounts. This also applies, we read the rules, to accounts that your spouse owns or a corporation that you control. Wash sales also have to be adjusted across that. So you can see how this can get very complicated in making these adjustments. Wash sales also apply in an IRA. If you've been around for several years, you might remember publication 550 wasn't very clear about IRAs in the past, but it has changed in the last couple of years, and now it's point 4 there, as you see in the little clipping on your screen. It actually states that an IRA account can trigger a wash sale. We're going to discuss that particular issue a little bit later. I'm sure there's going to be some questions on that as well. Also, that 30-day window, it says 30 days before or after the sale. The IRS has clarified in federal tax regulations, so 1.1091-1, that the 30-day window goes backward first. In the past, some people have asked if that was a matter of interpretation or if it was a personal preference. Well, the IRS has clarified you always look back 30 days first to start finding if there was a purchase that would cause a wash sale adjustment. And also, something to note, wash sales can cause the holding period to change on a security. We're going to discuss that more later as well and how that might affect you going from a long-term to short-term or vice versa. What about short sales? That question might come up. Well, that's addressed in IRS 550, page 59. Basically, if you cover or buy back your short, the short sale, then the shares at a loss, and the sell short, excuse me, I'm going to get my tongue twisted yet. And then you sell short again that same stock within that 30-day period, then you have a wash sale. The loss becomes part of your future cost basis when you finally cover the short. So when you read through it, short sales basically are a little bit different because it is a sale that triggers the wash rather than a purchase. So if you enter into a short sale within 30 days of a loss, then that's going to trigger a wash sale. Finally, let's talk about unequal shares. The IRS has clarified as well that wash sales can be affected by unequal shares, and as I'm sure all of you know, it's inevitable you're going to trade, you're going to sell and buy back unequal numbers of shares. Very few traders always buy and sell in the same quantities. So when it comes to wash sales, you have to determine the particular shares to which the wash sale rules apply. You have to match the shares bought with an equal number of shares sold, and then you also have to match the shares bought in the same order you bought them, beginning with the first shares bought. So especially now, many brokers are reporting time of day. The timestamp is important in calculating wash sales and which shares were purchased first within those windows. So that's the basic overall details of what the wash sale rule is. Let's talk for a minute about calculating wash sales, and we're going to look at some examples to help you understand wash sales better. Now, the IRS, first of all, expects you to record and report each and every wash sale throughout the tax year. Some people think that, well, maybe I don't always have to report wash sales, or maybe I just have to do it at the end of the year. That is incorrect. The IRS knows that wash sales can have a cumulative effect. So when they look at your reporting, they want to see wash sales accounted for throughout the entire year. So how do you calculate wash sales? Well, first you need to identify trades that have been closed at a loss, and then you scan backwards 30 days and then forwards to 30 days after the sale to see if you repurchased the same or substantially the same securities. That would include options as well. And if you did that within that window, then you need to record a wash sale adjustment on your Schedule D. You also have to adjust the cost basis of the repurchased shares. This is important because that way you move the loss forward or backward to whatever trade triggered the wash sale. Okay, so that was a whole lot of words, and it's one thing to explain the rules in that way. Let's take a look at some examples, and we're going to see from these examples a little if we can explain the wash sale calculations a little bit better. Let me I'm going to turn on my little highlighter here. This will help us out. Okay, great. So notice here that we have a very basic scenario. We have 100 shares of Apple that were bought on September 21st, and they were sold on September 23rd. Now, again, this is like an ideal world. The trader bought 100 shares, sold 100 shares. But we're going to use this for a basic start. Now, we notice the resulting loss was $1,200 that was lost on this particular trade. So now that a loss has occurred, as we talked about, we have to scan forwards or backwards and forwards by that 30-day window. So in this case, we're going to say this particular trader had no other trades prior to September 21st. But the next trade that occurs is on September 26th. He buys another 100 shares of Apple. So this then has triggered a wash sale that will need to be accounted for in his tax reporting. Now, one thing I want to highlight, if you look at the total, we have a total sales price, total cost or other basis, and then our gain or loss. So that's important to pay attention to that. Let me turn off my and go to the next part of this. Now, here's what results when we've made the wash sale adjustment. you'll notice that that $1,200 loss has been washed out, as we see on this particular line. There's that $1,200 loss. So now it pretty much washes out the loss that was recorded from the trade, so that when you add those two lines together, it's zero. Where did that loss go? Well, here it is in the cost basis of the replacement shares, the shares that were bought on September 26th. So you notice how that $1,200 was added into the cost basis. The result, instead of this trade profiting $600, it now has a loss of $600. Now here's an important point. Again, look at our total lines and our total sales price, total cost basis for the year. They're the same. The gain or the loss is same for the year, but the adjustments are made. Again, some people think, well, why am I bothering then? Well, it is important because at year end, those numbers can have a factor, but the IRS does want to see these adjustments throughout the year. All right, let's look at another scenario, a little bit more complicated because this time we have some different share numbers. So here we have the first two trades, which are the same as we discussed already. Oops, let me go back one there. Turn my tools back on. So here we have our first two trades. We've already discussed that example, but now on October 14th, this particular trader buys 100 shares, and then you'll notice he sells 50 of them on the 20th and 50 of them on the 21st. And both of these resulted in a loss. Okay, so that is our scenario. So how do we account for it? Well, here's the resulting wash sale adjustments. A little bit different here. Notice we already discussed this first wash sale, which put a loss in our trade that we sold on October 12th. Now, because that was a loss, now that loss has to be adjusted into the trades that were bought on October 14th. So we notice here we're washing out the $300 because there's two separate lots of 50, and this was 100 shares. And then that adjusts the cost basis down here for each of these lots of 50. So the original loss of $600 has now been accounted for in the loss of those trades. Now, if that isn't confusing enough, we're going to go to the next slide. Because remember earlier we said that that 30-day plus or minus window should always go back first. So let's say that this particular trader had another purchase. On September 16th, he had purchased 100 shares of Apple. Okay? So now you notice something that's changed in our wash sale adjustments. That first purchase on September 20, or excuse me, the second one now on September 21st, instead of moving forward, that loss is actually moved backwards. And so this cost basis has been adjusted by that $1,200. You could tell that the result was a $200 loss, so originally this was a profitable trade. But on our tax reporting, it's going to be reported as a loss of $200 because we're accounting for this wash. That changes a lot of things. Down here on October 14th, you notice these two trades, again, these are being washed backwards to September 26th. So you can see how everything can become very complicated because you're going back 30 days first and then you start moving forward. Ultimately, though, right now, in all of these examples, our totals at the end of the day are the same. They all total out the same. It's just a matter of how it's recorded. But remember, it is important to the IRS how it's reported. And so you can't just skip that part and say, well, it's not important. Let's talk about then the effects of wash sales. We're doing all of these adjustments. Well, really, wash sales affect us at the end of the year. And that's when we mainly need to worry about it. That's why we're doing this webinar here in November, because over the next few months is when you might want to be concerned about wash sales. And here's how it can affect you. If the repurchased shares that triggered the wash sale are held open at year end, or if you purchase them in January of the next tax year, then you might disallow the loss. What that means, the IRS says that the loss cannot be taken in the current tax year, but gets moved forward to the next tax year, or whatever year you finally dispose of those shares. Okay, we're going to talk about that a little more in an example. But basically, here's where it can be a negative effect. because although you lost the money this year, the IRS says if you disallow it because of a deferral, then you cannot take the loss until next year or possibly even later. Some of you might have experienced that. Some of you may have had wash sales that you've carried for many years in the past, and that can happen because of the wash sale rule. Here's a great example. This actually goes back to 2000, 2001. I've used this example in years past, but here's a trader who has a string of wash sales that occurred over the tax year, and you'll see these. I'm going to turn my little spotlight on. You see all the red lines here? Well, these are wash sales. And when we got down to the end of the year, notice something, these lines in red, these trades were trades that were closed on December 29th in the year 2000. So on the end of the year, December 29th, this trader, he sold out of SNDK, and he had heavy losses in it. Well, here's where the wash sale rule can have a bad effect, because in January, on January 2nd, this trader bought in two lots of 2,000 each, so a total of 4,000 shares of SNDK. The wash sale rule says then that this is that these losses that were taken had to move forward to that January trade. So in this case, we tried to adjust backwards, but there were no shares to adjust backwards in time, so all the losses had to move forward, and so they end up on January 2nd. What does that mean? Well, you notice here that those two trades in January 2nd have a loss of well over 110. In fact, it's $117,000 in losses that were all a result of the wash sale adjustment. So this total you see that I'm highlighting right now, this is what he actually lost. In the year 2000, this trader lost $110,000 in the market. However, because of the wash sale rule, $117,000 plus was moved into the year 2001, and he could not take that on his taxes. Now, if you do the math there, the difference between $110,000 and $117,000, that means he had to pay taxes on $7,023, even though he'd lost $110,000. So that is where wash sales can sometimes reach out and bite you, and it certainly hurt for this trader. Now, that's not always the case, but that is one way that wash sales can really have an effect on you, is the disallowing of losses. Another effect that wash sales can have is on the holding period. Remember, we mentioned earlier that the holding period of a trade might change due to a wash sale. Here's an example. Say that you have a long-term holding. You've maybe held this security for several years, and then you close it out at a loss. So you sell it, you take a loss, but then you buy back the same security or an option on that security within that 30-day window. Well, the loss now moves forward into the cost basis of that new trade. Okay, so now say that the new trade, you close that, you sell it out in less than 1 year. Technically, that new trade is a short-term gain or loss, correct? Well, that's correct, but because of the wash sale rule, the IRS says that you have to report that trade as a long-term gain or loss, even though technically it was a short-term trade. Now, of course, we know that short-term capital gains rates are higher, so usually you prefer to have your losses as short-term. In this case, the wash sale rule could possibly reduce or eliminate those short-term losses and could cause you to pay a higher tax rate because those losses have been, in essence, shifted over to your long-term gains and losses. Not as often that we see that type of negative effect, but it is something that can occur because of the wash sale rule. All right, let's talk about wash sales in an IRA. Actually, I'm going to go back here for a second because I think I wanted to ask a question of everyone. Yeah, let's put a poll up here. True or false? An IRA wash sale is not the same as, or excuse me, is no different than any other wash sale. What do you think? Put that up there and give you guys a chance to answer that. What do you think? Wash sales in an IRA, same as a normal wash sale or not? All right. Give everyone just a couple more seconds to give their opinion. And here's what you say. Let's share the results there. So 46% say true, that an IRA wash sale is no different than another wash sale. 54% of you say false. Well, if you said false, you are correct. Trades in an IRA account can trigger a wash sale with very bad effects. Now again, this is something that we've just gotten some clarification on in the last few years. Basically, here's what the IRS says will happen. If you sell a security at a loss in your taxable account, and then you buy back the same security or an option or contract on that security in your IRA within that 30-day window before or after, then a wash sale is triggered. Now this only works one way. Okay, purchases in a taxable account do not trigger wash sales in an IRA because IRAs are not subject to wash sale adjustments. You don't report those on your Schedule D. So in the revenue ruling in 2008-5, here's what the IRS clarified. The loss that was disallowed, that was shifted from your taxable account to the IRA, it's gone forever. In fact, it wasn't even shifted because there's no adjustment made to the cost basis of the purchase you made in your IRA account. You lost it completely. So for example, we were using Apple earlier. Say that I just sold out my shares of Apple and I took a $10,000 loss for this year because I sold it all. But then I make a purchase in my IRA account for Apple stock here within the 30-day window. Well, what happens is I could lose possibly that entire $10,000. It's disallowed. It's washed out. And it's gone. I don't get to ever take that loss, at least in my taxes. So even though I lost the money, I don't get to account for it in my taxes. So very bad effects that a wash sale can have if it's triggered by an IRA account. Now, no tax software program currently, including TradeLog, is able to automatically make these adjustments, so it requires a manual adjustment. If you do have that type of scenario, you can contact us here at TradeLog. We can try to help you make that adjustment manually. I will give you this little tidbit that we are hoping in version 9 of our software, which will be coming out here in the next few months, we're hoping that we will actually support IRA accounts and be able to make these adjustments automatically. But it is kind of difficult to do because it only works one way. But I'll tell you this, talking with successful traders and various consultants and CPAs, best practice for you, don't trade the same securities in your IRA as you trade in your taxable account. That's a best practice because then you're going to eliminate any chance of having this type of disallowed wash sale loss happening. It's kind of a negative that's come out in the last few years as they've clarified this, so we want to make sure everyone knows this is what the IRS says to expect if you are trading in both your taxable and non-taxable account for the same security. So with these negative effects that we've talked about, when do you want to worry about wash sales? Well, I'm going to tell you this. Many successful traders find that their time is better spent on making profitable trades. They don't sit and worry every single day about wash sales. Their only concern is to make sure they report them correctly. Because if you don't report wash sales and you get audited, it can really cost you in the pocketbook. However, when you do want to worry about wash sales is if the disallowed losses at year end are going to cause you to have a taxable gain when you actually lost money for that year. So remember the example I showed you a few minutes ago of the gentleman back in 2000, 2001. He had to pay taxes on a $7,000 gain even though he actually lost $110,000. That's an instance where being aware of wash sales in your account and trying to avoid them could be advantageous. But we do encourage you the rest of the year, don't add more stress on yourself than necessary every day looking, did I have a wash sale, did I not have a wash sale, because it's inevitable. You can't avoid them completely. Now, if you do need to avoid a wash sale or you need to reduce a deferral that might be occurring in your account at year end, we're going to give you two simple rules to keep in mind if you want to reduce your risk of having some or all of your losses disallowed. All right, and I'm going to give you these rules, and then we're going to switch over to TradeLog. We're going to take a look in TradeLog at some examples and how we can apply this rule. First, if you take the losses in any stock or option in the month of December, be sure not to repurchase the same stock or an option on that stock for a period of 31 days. Because remember, if you do, then your losses might be deferred, and it might end up being deferred to a later tax year. And you won't permanently lose the loss, but you just won't get to take it in this current tax year. For some traders, that's okay. They don't mind deferring the loss, but like I said, if it's going to cause you to have to pay taxes that you shouldn't have to pay, then you might want to be concerned. Now here's a tip. In TradeLog, you can run the gains and losses report for the month of December, and you can use that to take note of losing trades, or you could even create a custom filter. And I'm going to show you some things on how to do that. I'm going to switch over to TradeLog right now. Let me make sure that it pops up in our view here so everyone's seeing it. Okay, great. All right, so here's an example. It's actually some of the same trades that we've already discussed. We just created a pretty simple account with some Apple trades, all stocks, didn't put any options. This is actually 2010 dates because we want to imagine that we're in the month of December. Okay, I'm in the month of December right now, and I want to look and see, well, am I going to have disallowed losses? How are my wash sales affecting me? So first thing I can do is go to the Reports menu in TradeLog, and I want to go to Gains and Losses and Tax Forms. Okay, so here in this menu, we have various options. We can just run our gain and loss report. We can run the wash sale detail report. Now, I want to give you a little tip. If it's in December and you're wondering, am I going to disallow or defer any losses? Go ahead and click on the wash sale detail report and then click Run Report. And notice I get a little pop-up box right away. It says, good news. There are no disallowed wash sale losses to defer. All of your losses will stay in the current tax year. So this is a nice little feature in TradeLog. It basically instantly tells me that where I stand right now, at this moment, I am not going to be deferring any losses to next year. Okay, so that's fine. But let's say I'm not done trading. I mean, obviously, maybe it's the month of December, so a wash sale could occur. So there's some other tips and little tricks I can use to kind of help get an idea where I stand and if a trade might cause a wash sale. So first thing I'm going to do is I'm going to go back to the gains and losses window, and I'm just going to run a gain and loss report. But I'm going to put the start date as December 2010. Actually, I'm going to go ahead and do November 1st, 2010. I'm going to run it through the December 31st just to see all of my trades here in these last 2 months. So I run that gain and loss report, and what that does is it shows me here are trades that have closed out at losses. And look at that. Every trade I've had during that period has had a loss. The last one was on November 15th. So keep in mind, actually, excuse me, the last one was on December 5th. I was looking at the wrong column there. We look at the date sold. Keep in mind, that trade on December 5th, if I purchase shares within 30 days of that, it's possible that I'm going to have a wash sale. So I need to keep that in mind, because if I'm going to go buy some Apple shares right now, it is possible that I will defer that $525, that it's going to be washed out and it's going to go to that next position. Now, whether that's good or bad, well, that's up to me. Again, don't think that wash sales are evil and you want to avoid them at all costs. That's not the case here. But we're just showing you how, if you do want to look and see where a wash sale might occur, how to avoid it or what to do. So that's one report that I can use. Now I'm going to give you another little trick here that I like to use, and it's using the custom grid filters. I don't know how many of you are familiar with building custom grid filters, but that's this little option here on the toolbar, Build Custom Grid Filter. I select that, and what I can do is I can build a custom filter to view just particular things I want to view. Say that you're a very active trader, you have hundreds, thousands, maybe hundreds of thousands of trades. Obviously, most of you aren't trading the same security, so you want to maybe look at one security. So maybe I want to look at just Apple, and I want to see, are there Apple trades that I need to be concerned about? Well, what I can do here is press the button to add a condition. And I want to choose first to look up my ticker. And I want to choose a ticker that is equal to AAPL for Apple. And I'm going to add a wildcard symbol, the asterisk. That's going to look up any security that starts with Apple, including options. Okay? Next, I'm going to add a date range. So I go in here to date, and I'm going to put between, or actually I can just put greater. That's easier. Greater than. So I want to go back 30 days before, and again, we're going to have to use a 2010 date. So let's say for this particular file, I wanted to look November 1st, 2010. All right, so now I've created my filter, but here's a little trick to make it easier next time, is I can do a save as, and I can save this filter as my wash sale lookup. All right, and I can save it to wherever I want on my computer. All right, now I'm going to apply this filter real quick. And it didn't pull anything up for that. But notice here what I can do in the future, oops, I might cancel that, click on all, is I can go back and I can choose that same filters that I've done. In fact, I'm going to choose another one. I did wash sale filter. There we go. I needed to do the ticker like AAP, and that's why. Okay. So then I hit apply, okay, and then that's going to look up anything that I might have for that particular security based on that date. And I need to change my date, 2010. There we go. Now I got that to work. So by using that, now anytime I want to take a look at a particular security, I can just click on that, do open, choose that filter that I wanted to use, and then just change the ticker and the date that I want, and I can apply it. So that's just a little trick there. Might have done that a little quick. If you ever want to learn a little more about that, you can see some of our help files, or give us a call at support, and we can show you how you can build that. But basically, right now in this particular example, I don't have any wash sales being deferred. So it tells me that as long as I don't make a purchase within the next 30 days, I'm fine, and I don't have to worry about it. But I'm going to go back over here to our slide, and let me look real quick at something here, make sure I'm covering everything. Okay, so that's our first rule, is if we have losses in December, don't buy anything back within a 31-day period, then we're safe. Okay, let's look at our second rule. Our second rule would be to consider closing out open positions at year-end that have accumulated wash sale losses. If we have a position that's open at year-end and there's a wash sale loss attached to it, remember that wash is going to continue until we close out of that position. So it could be deferred into a future time. So to avoid that, we can consider closing the position that has a large wash sale loss attached to it. And then again, we don't want to trade it for 31 days because we want to capture that loss. Now, the wash sale detail report and TradeLog can help us to spot that and then take appropriate action. Let me show you how. We're going to switch over here to TradeLog. And I'm going to open a different example here. Pretty much similar to what we had, but a little bit different scenarios here, okay? So now when I run my gains and losses and tax forms, all right, I'm going to run the wash sale detail report again. And I click Run Report. Now you notice this time it actually generated a report because I am deferring some losses. What this report tells me is that I am deferring $1,050. It's attached to Apple as the security, okay? And it says that that's attached to year-end open positions, okay? So I'm still in the year 2010, we're going to say, and so this is what's open before the end of the year. So the next page will actually show me some of the details of that. All right, and it explains a little bit about what this report does. There's some notes important because some people try to use this to look at their gains and losses. This is a little bit different report. It's just looking at where wash sales occurred and why they're being deferred. So here it tells me some things about my Apple stocks. It shows all the adjustments that have been made in my trade history. Okay, so these are all the wash sale adjustments. And notice here that on December 15th, I bought 200 shares of Apple. When I made that purchase, you notice here some of the losses, the wash sale adjustments. I had these losses that were adjusted to that cost basis. They totaled $1,050. So right now there's $1,050 of losses that I am not able to take because they're attached to that open position. So let's say that in my analysis of my trading, I need those losses for whatever reason. I need to capture those this year. How can you do that? Well, here's that second rule of what you can do. Now that I know what I need to take care of is I need to close out my positions of Apple. So maybe I go in to my broker and I go ahead and I sell these positions. What I'm going to do right now is I'm going to just create the close position. So I sold Apple. I sold those 200 shares. But I'm going to show you another thing. Just say I sell those shares, but I sell them at a loss. Let's say $370. All right. So there, now I've closed that position. I don't have any shares of Apple that are open. But if I run my wash sale detail report again, I want you to notice something important. Let's see if you caught it in this. I'm still deferring losses. This time they're connected to an option that I have open. Okay, so and in fact I'm deferring $7,050 that's attached to that year-end open position. How did that happen? Well, again, I closed out that Apple, but I took a loss on it, and I didn't close out all of my positions because there's still an option open. So this is a good example to show you that when you're dealing with stocks and options, again, wash sales have to be adjusted between both. So if I want to take these losses for this year, I'm going to have to close out that Apple contract. And you notice in this example, it's a January 2011 contract, so it's not going to expire until January. So either I'm going to have to choose to sell it, or I am going to defer those losses. All right, if I go ahead and choose to sell that contract, then I'll be able to capture those losses. All right, but this is how we can use those reports to tell what is going on in our trade history. Switch back over here to our presentation. All right, so those are two rules for avoiding wash sales. Close out your open positions, but then also make sure you don't buy any positions within 30 days. Because remember, even if you have a loss on December 29th, if you make a trade in January, if you make a purchase, it could cause that loss to move forward to the next year. Let's take a minute now to talk about some common misconceptions about wash sales. Give me just a second to catch up, make sure here that I covered everything. Yep. All right. So popular tax software programs will handle wash sales. That's one misconception. That's false. Most popular tax software programs do not properly handle the wash sale rule. Programs like TurboTax, Tax Cut, Tax Act, they have limited capabilities for wash sales. But as you've seen how complex it can be, those programs were never designed for traders specifically. So that's important to remember. If you're using something like TurboTax or something, most likely it's not going to adjust your wash sales correctly. In fact, many of you are familiar that here at TradeLog we partnered especially with Tax Act. Our friends at Tax Act, they came to us, they recognized that they obviously couldn't handle traders' needs when it comes to wash sales, so we've worked closely with them to build a good interface so that you can use TradeLog and then use Tax Act to file your taxes electronically. Another common misconception, our second one here, my broker provides accurate wash sale reporting on their new 1099-B or on the P&L. That is false as well. Broker-provided P&Ls or gain and loss reports are usually not reliable for tax reporting. In fact, we know of one major broker who oftentimes their reports disallow wash sales completely. So it might see where a wash sale occurs and it might disallow the loss, but it doesn't actually move it into the purchase that you made that triggered it. So what results is you may lose all of the losses for the entire year. We don't want that. Okay, also, many of you might know about the new 1099-B forms. For 2011, your broker has to report cost basis. They have to report some wash sales. but they do not report all the wash sales that are required by the IRS. I'm going to come back to that here in a moment, and we'll discuss that more. Another misconception is that you don't have to report wash sales through the whole year. That's false as well. The IRS does require you to report each trade through the year along with all your wash sale adjustments, since they can have lasting effects later on. And especially now with the new 2011 broker reporting, this means that the IRS is going to have a general idea whether you should have wash sales, and so you can expect to see increased enforcement. So if you haven't been reporting wash sales at all in the past, you're walking on thinner ice going forward. And I know some of you, we just talked to someone the other day that has been audited all the way back to 2008, and the IRS is telling him he owes over $1 million in back taxes. How did they get that number? Well, they kind of pulled it out of a hat. But bottom line, didn't have wash sale adjustments, didn't have things properly reported. So now he has to go back and do all that again. That certainly isn't fun. Now, an important note, we talk a little bit about 2011, the new 1099-B that your broker is going to provide. It's important that everyone knows the wash sales that brokers will be reporting on the 1099-B are not calculated according to the same rules that are required for individual taxpayers. They're considered third-party information, and they're not for tax reporting purposes. For example, your broker does not have to calculate between stocks and options, and they don't have to calculate across all of your accounts, nor do they have to account for things on an IRA, as we talked about. So the IRS still expects you as an individual trader to calculate your own wash sale adjustments for your trade activity. The information provided by your broker, it's just third-party information. It's just to help the IRS to see whether you are reporting close to what you probably should be. Now again, we've shown some examples of TradeLog. TradeLog strives to meet the letter of the law. The IRS would properly calculate wash sales between short and long trades, calculate between unequal number of shares, between stocks and options, and across all your accounts. Also important is TradeLog keeps track of wash sale deferrals for future years. I'll show you that in just a moment. Also, it's important to know that you can export your wash sale adjusted gains and losses and use it with popular programs. As I mentioned, we work very closely with TaxAct. So if you're filing your taxes with TaxAct, you can use TradeLog and export your data into TaxAct and be able to e-file. We also have a TXF format that can work with TurboTax and other software programs as well. So TradeLog is that additional tool that specifically helps you fill the need of adjusting for wash sales in your account, and then you can use that in conjunction with a popular software program. Now, I want to go over to TradeLog for a moment. I might answer some more of your questions here as well. Let me take a look real quick here. All right, so I'm going to open up a file here, another sample file. This is wash sale example 3. So here in this file, I want to show you how TradeLog helps you with those wash sale adjustments and keeping track of it. So again, now in this file, if I run my gain and loss report, we're going to see some important features here. Let me turn my spotlight on again. So here's our gain and loss report, which is identical to the Schedule D1. Here's what TradeLog is going to report for you. Notice for this particular trader, their taxable gain and loss, they lost $1,850 according to the taxable reporting. What happened? Well, in actuality, they lost $3,900 in the year. It wasn't a good year. All right? But because of the wash sale rule, $2,050 cannot be taken in the current tax year. So it had to be deferred to the next tax year. So the result means they can only claim $1,850 in losses on their taxes. So there's an example where it is affecting taxable income, and it's up to this trader whether or not before the end of the year they wanted to do anything. Now in this case, if we look at this file, this is a 2010 file, so it's long gone. Once 2010 was over, you couldn't change it. Keep that in mind for 2011. Once 2011 is done and over, you really can't do too much to affect wash sale deferrals except for not trade that security in January. All right, so this is the file that TradeLog creates for the gain and loss report. We already looked at the wash sale detail report, but we'll take another quick look at it here. here in the wash sale detail report for this file, again, we'll notice Apple Securities. There's two things we're going to note this time. There's losses attached to year-end open positions, and there's losses that are attached to January trades. Let me take a closer look here. We're going to go to the next page. And again, here's the history of what happened. All right, and I want to show you a couple things. Oops, go back here. So here's some positions that were, this is a position that was at the end of the year that was open in December, okay, and it had losses attached. Because this particular trader didn't close that out, those losses are still attached to that open position, okay? But also, you notice in January, they purchased shares of Apple, and what that did is it triggered wash sales as well back from the past. So some of the losses they had back in December moved forward to January, and that's what's creating this total of $2,050. If I go back to the first page, we see it broken down there so we know what's going on. This was attached to opens at the end of the year. This was attached to January trades. All right, now what happens at the end of the tax year? Again, tax year is done for this particular file. Well, when we run the end tax year process, I'm running the mark-to-market version here, so I just got to answer this question, no, for mark-to-market. But it's going to ask, did I import my trades for January 2011? That's important. Yes, I did. Now it's going to run the end year process, okay, and it created a 2011 file. So I can go in here and look up my 2011 wash sale example file, okay. Here's my 2011 data file. It's rolled over my positions that were held open at the end of the year. Okay, so there's that position. And here's the wash sales that were attached to those open positions. You notice here it lists them as a W. So these are losses that were deferred that I couldn't take last year, and they're attached to these open positions that I have in the new tax year. So this is very important because it's keeping track of those losses. Some software programs might calculate wash sales, but then they don't keep track of it for the next year. Well, you don't want to lose those losses completely. So we're helping you by keeping track of that here in TradeLog. So those are a few important features I wanted to highlight in your TradeLog software so you understand what wash sales are doing and where they're going. All right, in conclusion, what you need to remember about wash sales. The wash sale rule affects almost every trader, and they must be properly calculated and reported. That's between stocks and options, longs and shorts, and all accounts. Adjustments have to be made properly, also between unequal numbers of shares, and it can potentially have a negative impact, causing you to disallow losses. That is potential. Most popular tax software programs and your broker-provided reports don't handle wash sales properly, so you want to keep that in mind. The TradeLog does handle wash sales according to the IRS rules. Now, as I did mention, we're not able to automatically adjust for an IRA account at this time. That is something coming in a future release. So if you do have an IRA account, you might want to contact our support department. We can talk about how to adjust for wash sales if indeed you are trading the same security in both your IRA and your taxable account. Keep in mind, as a TradeLog user, we're here to help you. If you need help, you can call us on the phone or online. We have online tools as well. If you have additional reports, tools you'd like to see, suggestions, you can always fill out our online form at our support center. In fact, I'm going to take you to our support center real quick. Here online, our TradeLog Support Center, we have our online support requests, so you can fill that out. You also have our phone number, you can call us. But something I also want to show you is our tax topics. Here we have tax topics on various subjects, including wash sales. So if you want to learn more about wash sales, you can take a look at this. We even have a great little feature here, wash sale trade combinations. This particularly affects if you have options, puts, and calls. We give you all the scenarios that can happen in TradeLog that cause wash sales. So if you really want to dig deep, there you have it. Also, don't forget about our blog. We talked about the new 2011 reporting for brokers. We have information, resources on that. Also, I'll give you a little heads up, there's new forms coming in 2011. And so we have some new We have that available as a resource for you, the new forms for 2011. You can read about Form 8949 and adjustments to Schedule D. And keep in touch with us. We're going to be having webinars here in the future as we update TradeLog for these new forms so that you're aware of those as well. All right, so that's our main presentation today. I hope that you were able to learn something new. In fact, before you leave, I would like to just ask one more question to everyone. And while you're answering that, I'm going to look through some of the questions that we've had submitted here. But let us know if you learned anything new today. Hopefully you did. And again, if you have a question you've submitted, stick around. We're going to try to answer that. I know Caleb's been answering some of them in the background. And we're going to, for those of you who have to take off, again, we thank you for coming and joining us today. We hope to see you at a future webinar. This webinar is being recorded, and it should be posted up online within the next week. Sometimes it takes a couple days to get things processed and put up on our website, but we will send an email off to everyone when it is available, so you'll have that available. All right, so we're going to take a look at your questions here, and we'll be answering those either offline, we'll be sending you the answer directly, or I'm going to see what ones I can answer